Hello and welcome to this special sneak preview of the World Payments Report. And joining me today is Simon Newstead from RBS and Jean Lassignardie from Capgemini.
As the World Payment Report is, I guess, well known for, we have some analysis of the latest global trends, regional trends and national trends in terms of growth in the payment business, different use of payment instruments, and how that's different between different parts of the global economy. Secondly, we have a spotlight focus on regulation as it affects the payments market. That's something we did in last year's report, and we built further on that this year with additional items considered, and a particular focus this year, as the strap line behind me shows, on the creative tension, the interplay between regulation and innovation. And actually innovation is probably the core theme that runs through the whole of this year's report.
Yes, I've heard this a lot, that sort of tension between regulation and innovation. And I think that kind of leads us on to our next question, which is, what are some of the latest trends that we're seeing in the global payments market?
The payment industry and the payment non-cash payment has done pretty well with significant growth, as we mentioned in the report, 2010, despite market volatility. And it's about 5% in the key market, in the mature market, which are US and Europe. We spoke about regulation impact and innovation. We think that regulation, which has of course been developed after the crisis, has really or do influence the innovation, but it is not black or white. And as we demonstrate, on one side, of course, regulation does imply some significant amount of attention, of means, and for sometimes can prevent for addressing innovation needs. But at the same time, it's also stimulate that in a number of cases. We do think that, as we develop in the report, that for a payment service provider, I think it's very important to start with what customer wants, with the perception of customer needs, and that's absolutely a fundamental point.
So Simon, you promised us a little bit more detail, especially on the regulatory front. So what is new from a payments perspective in regards to regulations?
A number of the initiatives that we focused on last year, they've been further developments. So to take a couple of examples, Basel III, we talked about in last year's report in terms of the potential implications of the payments market in the sense of the impact on intraday liquidity. As we've seen over the last 12 months, it's now clearer the form that change will take and how the market's starting to respond. So there's been sort of further developments in that space. Another example of an initiative where we're reporting significant further progress is SEPA, where this time last year we didn't have a SEPA end date, which we now have, and that's catalysing a whole series of further changes which are moving that initiative forward. That apart, there's also some new regulatory initiatives that we didn't have in the report last time, and that's either because they are initiatives that were known about but didn't obviously have a payments impact when we were thinking about it a year ago, and a good example might be FATCA, the US tax initiative that actually has some quite significant payment implications, and also brand new initiatives. For example, some of the strong regulatory focus in a number of regions and countries now, examples being Canada, at European level and more recently within the UK, around the whole question of payment governance and what's the best way of structuring a governance approach that brings together suppliers, users and other market stakeholders. So really we focused on looking at those different aspects, seeing how the market's moved on and really looking how the complex tapestry of payment regulation interrelates and how it continues to be so important, reinforcing the finding we had last year that you take a holistic view, you look at all 32 of the initiatives that we've mapped out in the report in this space and think about the interdependencies, think about how they build on each other and sometimes how they pull in slightly different directions.
Does regulation really hinder innovation or can it favor it?
I mean, that's a very black and white question, and actually the answer's unsurprisingly more complex. I mean, what we did, we took those 32 initiatives and we sort of mapped them in terms of which had a positive impact on innovation, in terms of stimulating directly or indirectly some change in the market. And we found actually that 50% of them, roughly, have a pro-innovation effect. So that's actually half of all those regulatory initiatives are in some way stimulating innovation. If you go down to the next level and say what type of innovation are they stimulating, roughly half of those again are focused on what we describe in the report as customer-centric innovation, so focused on the end user and the experience that they have, what they receive, maybe who they receive their service from. And much of the rest of it in the regulatory space is focused on what we describe more as standardization and efficiency. So equally important, but perhaps less visible to the end user.
So what about the innovators? I mean, do they often have issues around proving their business case? What are some of the strategies they can use to manage that?
Making sure that everything starts with really customer understanding and making sure that this innovation case is based first and before everything on a customer needs, either customer being a retail customer or a corporate customer, or for sometimes some innovation that may be applicable to the two of them. The second piece is obviously making sure that any bank, if it's a bank who is innovating in the space, start with a self-assessment, and real, truly well-made self-assessment to understand their own capabilities and solidify the innovation foundations. And then by the combination of good understanding of the customer requirements and a true self-assessment, they can be a targeted business plan, a targeted set of initiative around innovation, leveraging innovation to really address that. And if you are really focused, you can make sure that, for example, electronic invoices matching, services to corporate has been something very interesting. We have other example, one European bank has designed, cross-border electronic bill payments and presentment solution, right, for several with several technology vendors. I think the final point, which relate to the last one, is making sure that you can, as much as possible, co-design with either some of your customers, if it's on corporate, as well as your ecosystem to, as soon as you can, get scale, which is also something that is under question for building a sustainable business model for innovators.
So the payments industry has been going through a lot of change over the past few years. Is the payments industry still an attractive business to be in?
Oh yes, I think definitely, and this report year after year, and again this year, do show or do demonstrate on fact-based, both on survey as well as interview, that there is huge amount. First of all, it's a resilient business. I think the numbers that we have produced together in this report year after year, and specifically across the crisis, do demonstrate that it's a resilient industry. Second, we have seen and be surprised with the growth and the rise of e-payment and specifically mobile payments, which is also a significant area and domain of innovation and development, both for all the different players of this industry, both the historical players, the banks, as well as the new entrants. So I think really definitely for whatever angle do we observe that, that industry, it is facing turbulences, of course. At the same time, it's probably one of the few industry that, again, across the crisis demonstrate resilience and demonstrate year after year, even at the surprising accelerated growth, some significant area of innovation, new solution, new means that really fits with customer expectations.
So to close up, I was hoping that both of you could give me some takeaways from the report. So Simon, I'll start with you.
I think on my side, there's a couple of key messages. Building on the point that Jean's just made about resilience, I think for me, the non-cash payments market clearly remains a growth story. Different growth levels in different parts of the world for sure, but pretty astronomical growth rates in some particular areas, such as mobile payments and e-payments. So I think they are very strong messages about where we ought to be focusing as an industry given the clear potential that's there. I think a second message for me is that the regulatory landscape for payments remains very complex, remains very multi-regional, and it remains hugely important to take a holistic view and understand the implications of all the regulatory change out there when planning your response. It's no longer possible just to take a regulation by regulation approach. And I think for the third takeaway for me would be around the interesting interplay between regulation and innovation, and actually the significant number of regulatory initiatives which have led to and are leading to all sorts of interesting innovations within the payments market.
And Jean?
I think I fully agree with what Simon said about the key takeaways. On the overall growth of non-cash, I think resilience was mentioned. I think the fact that, very interestingly, we thought that the concept of BRIC may no longer be applicable, as we see now, for example, Brazil becoming something like a mature market, which has been a little bit of new news, if I may say so. Second, I think Simon mentioned the electronic payment and mobile payments. The key takeaway is, for example, mobile is going faster than anybody can predict year after year. And that's absolutely a key factor. Around regulation, I think Simon perfectly mentioned the importance and the fact that on the effect on innovation, it can and sometimes a little bit prevent or limit, and at the same time stimulate. And I will finish on innovation where the survey we made for this report brought us an interesting factor, which is for all the key leaders of the payment institutions, they all said innovation is key to attract and maintain customer loyalty before making some good things for productivity, cost reduction, effectiveness. So the link between the imperative to innovate linked to customer acquisition and customer retention is also something that is key in this report.